Hello, this is John Piper with the weekend video clip, and it's Saturday the 31st of January. Start with gold as usual. We're now seeing a nice ABC, A, B, C, that's A, wave B, wave C, and a fairly good buying response here. So we're now motoring up back to 1300, which is looking pretty encouraging. You could now raise your stops if you want to do so below that level there. Let's go upper scale. Here's the daily chart. Please ignore this bad tick, which I've been trying to edit out, but it won't go away. We've still got this 1, 2, 1, 2. Now we've got this 3. This looks like a 4. That looks like a fairly good low there. In which case we're now looking for a fifth wave. It takes up to about there maybe before we see another correction. I mean, it's going to be, well, it's going to be a bit up and down for a while perhaps. I mean, that's wave 3. Then we then have a 4. May retest that low again, and a 5. At that point we could see a bigger correction, which could in fact be deeper. So it may be a bit up and down for a little while, but we got in around 1240, so we got in there, so we should be safe from that kind of stuff. You may want to take profits. I may of course be wrong. It could just, we may find that the thing accelerates more quickly. You never can be sure, which is why we want to stay positioned into this move. But certainly the rally we've seen does well give us some confirmation that we're right positioned long in gold, and hopefully this low will hold if it's retested, which of course it may well be. Right, so the Dow next. This is the chart from yesterday's email. So it can be a triangle, A, B, C, D, E, or it could be, I mean that's certainly a valid count. The triangle count actually has a similar implication to the alternative count, which I'll give you in a minute, but so far we've seen these two breaks. We ended up going down lower yesterday. We might see follow through because of the figures that came out, or just I mean the figures came out as secondary to the balance of bulls and bears, and the balance of people bought the market, etc. So we may continue. Let's have a look at the alternative count here. The alternative count is that we've actually seen the peak here. Well, that's the case in any case. Then we've seen a 1, an ABC 2. Then another 1, another 2, and now we're in a kind of third wave coming down. The only issue here is that we have got these 5 waves, 1, 2, 3, 4, 5. That can be a 1 and a 2 there. So this can be a 4 and a 5, suggesting that any new low here may not actually achieve very much. So again, that's another consideration. It's not an ideal count, because at this point in time we haven't really seen any sharp selling. We haven't actually taken out the 17,200 level with any great style. If we look at the S&P here, we see a very similar situation with a similar, not quite a clear triangle, but not that dissimilar really, with again key support around 1990 really, and there's the resistance above there. So we've been sort of churning between those two levels now for a while, with a couple of breakouts, went nowhere, couple of, well, not much on the downside. We're setting the 2000 level. We look between 2000 and 2040. You can see these continual false breakouts. Bit of a trading nightmare in the sense, and unless you want to fade these things, of course. And we've also got the similar counts that we had on the Dow. 1, 2. That could be part of the 2. Then another 1, but then of course it goes higher. So it's a slightly less clear pattern, in fact. Also the 5 waves are not so clear here. You could count this 1, 2, 3, 4, 5, A, B. It's a bit open really, but again, obviously key support around 2000, and the battle, a strong battle is raging there. And well, I say we could just carry through. It could be that Monday just brings a sell-off there, and the thing changes dramatically. But we'll have to wait and see until that actually happens. Right, the FTSE daily chart. Daily chart just shows this strong resistance around 6.9. A number of peaks around the current level as well. So once at the current level, I mean the peak we've seen here. But this looks like a correction. Right now, it just looks like a correction. In fact, let's go down scale, have a look at that. So pretty clear on the hourly chart. Looks like a 1, ABC 2, and now a third wave with this drift coming in. I mean, obviously these things can change, but right now it looks more like we're going to see maybe a bit more coming in on Monday, and then maybe a buying response coming in, and that would tend to confirm that we've seen we have seen a correction, and that we're going to finally try and get above 6950 was the all-time peak seen in New Year's Eve 1999, which is a good 15 years ago now, 14 years ago. Obviously if we can make it above 69, then 6950 is pretty much guaranteed, I would have thought. The wave count, I say, looks okay. Quite where this, this is a fourth wave, then it's fairly a bit subnormal compared to what might well be a wave 2. So there is some, well, that remains to be seen really, but the case for a move up still seems quite strong there. Obviously what the Dow might do could be quite significant. Right, a quick look at the DAX. Now we've got this double top peak there and this retest there. This could be impulsive. 1, 2, 3, quite a sharp, well, 5. This looks like a correction, I suppose, although, yeah, definitely, because there's no third wave there. Possibly impulsive, I suppose. I mean, it's a bit of a mess, really. There's not really much to say there that's very meaningful. The double top pressure is the most obvious factor, and clearly 10.55, 50 is an important level. So again, it all depends what comes next here. Finally, pound dollar. I've discussed this before. The key thing is this rally here. It could be various things, as I said. I mean, there's a definite, very clear 5 waves here. 1, 2, 3, 4. Bit of a truncated fifth, but that's often the case. 150 is the key level, which is just being probed really, but is held for now. So it's what kind of rally we see. I won't go through the various parameters on this occasion. I've done it a few times before. So let's have a look at the shape of this. So let's have a look at the shape of this rally. 150, I say, is around there. So you'll see we've got the initial move up, which does actually look pretty impulsive. You can just about count 5 waves there. There, 4, 5 there. 1, 2, 3. Yeah, just about. Anyway, it looks fairly impulsive. This is also quite sharp, but fairly good buying response there. So I think it's one of the situations where there could easily be a decent spurt here. We want to see what happens next. Yeah, I mean, there's a good case for buying pound dollar next week. If we see this rally continue, we've got a decent double bottom. We've got 5 waves into the low there, and we've got pretty impulsive move there. 1, 2. I don't think I want to count it really, I suppose. I mean, this could actually be. It looks like the only slight worry is that sort of is the sharpest thrust up. I suppose we could count that as a 1, 2, 4, 5. Anyway, there's certainly a decent case for that. Stops below 150, and enter when you see something that is part of your trading system really. I always stress this. I mean, people need to trade in a way that suits their own personalities. I try and give you setups, and obviously we do give confirmed signals from time to time, as with the gold signal. Right now we need to be a bit more to trade this. And in fact, the markets are closed right now. If they weren't, I might be tempted actually, but as they're not, I may as well wait to find to see something else on that. Okay, that's all for today. If you found that interesting and useful, we'll be back with the opening report at 10 o'clock on not 10 o'clock today, but Tuesday morning for subscribers. I hope the sun's shining over there. It's a nice sunny day in Spain, although it's been cloudy up to now. Have a great weekend. Thanks for listening, and bye for now.